Okay, the requirement is how much money is being stolen. You will be given with so many information, so you need to check for your information that how can you use it. This is an example. Miss Martina runs a computer hardware shop and she thinks some of her cash been stolen. Okay, how much cash stolen? We need to find out by using some markup, margin, inventory, receivables information, and we might have to use a little bit of trading account. Have a look. Opening, closing inventory and purchase information given. Of this information, what can you do? You can make a little bit of trading account, cost of sales, yes. Opening and closing receivables given. What can you do? Maybe you can do sales ledger control account, yes. And how much cash in actual they paid into the bank. Oh, it moved from here to there. Ooh, it doesn't matter. Okay, let's start the answer. So we'll start with a trading account. Small trading account. Trading account. If you remember, your trading account is sales less cost of sales, you get gross profit. But here we're gonna do our cost of sales figures only. We have been given with opening inventory, which is 1700 plus purchases, which is 5580. Okay, less closing inventory, which is INV. Don't write like this in the exam, write in full, which is 1950. It's a minor. So opening plus purchase less closing, you get cost of sales of 5330. That's your cost of sales. COS, cost of sales. Okay, if you see here, there is a 40% markup given. So times by 40% markup, you're gonna get your profit here, which is 2132. So if you remember, cost plus profit add up and you get 7462. That's your sales. Okay, that was part one of this type of questions. You need to do a trading account to get your selling price information. Now, what do we do with selling price information? If you remember over here, opening and closing trade receivables being given, we use it into your sales ledger control account to find how much actually we should have put into our bank account. Okay, all right, let's open let me take the pen again, and it's a green pen I've been using. The T account, sales ledger control account is a debit account, just like trade receivables account. So balance BD, we know there's a balance BD given and balance CD given. Balance CD, as soon as you write balance CD after the total on the other side, it becomes balance BD. Okay, what are the figures? The top over here, it's 2100 and 2700 opening and closing. Okay, 2100 was the opening and 2700 was closing on the other side as well. And sales, sales, we found a 7462. That's what we will put in our sales, 7462. And any money received from our trade receivables, and this is somewhere here. Yeah, there you go, 6562. Oh no, we'll not use it. Rather, we'll look for how much is the bank. Yep, what is the balancing figure? Okay, so we'll check which side is bigger, debit or credit. Debit side is bigger. If you add these two The added up figure is 9562. We write here 9562. Take away this 2700. Your bank should be 6862. Okay, that should have been put into our bank. But look at this. How much been put into the bank? It's 6562. Yeah, it's less. So, okay, let me take it up. Let me take my pen again. And 6862 should have, but 6562 is in bank. Should have this one, but this is in, so there is a 300 less. That's your lost